Welcome, and thanks for taking the time to view this message. Spectrum Wealth is a registered investment advisor firm that works with clients on a fee basis only. We feel the industry's traditional commission-based pay structure is a conflict of interest. Most individual investors with less than $1 million in investable assets have been forced to work with financial salespeople like stockbrokers, insurance agents, or financial planners who are paid by some form of commission with the retail products placed. We have embraced investment theories used by the institutions and most sophisticated pension plans. These concepts are led by top academics and Nobel Prize winning strategies. We have access to these institutional class mutual funds that are not available to the public. As an investor coach, my experience tells me investors are frustrated with the investment process. It's understandable that investors feel this way because most investors have no peace of mind around investing. Why are investors uncomfortable working with investment professionals? We believe it's part of a 7-step cycle individuals tend to go through called investor's dilemma. Step 1, fear of the future. Investors feel unsure of what they're doing and have been sold commission-based products and have not been serviced after the sale. Step 2, the crystal ball. Believing that someone out there, whether it's you or the broker or some money manager who's on the cover of a magazine, can actually predict the future and pick all the best stocks and investments out there. Step 3, track record investing. Chasing returns, looking to the past to get an idea of what investment or manager will do well in the future. Picking 4- and 5-star rated funds because they did well in the past, and studies show that those funds will not repeat. Step 4, information overload, the uncontrollable noise from the media hype in the form of contradictory advice. Investors get confused and don't feel comfortable taking action. Step 5, emotion-based decisions, decisions that are based on fear and emotional reasons rather than as part of a well-defined, academically sound approach. Step 6, breaking the rules. The golden rule of investing is buy low and sell high, right? Yet most investors break this rule all the time. When there's euphoria in the market, everyone wants in, and when the market is in panic, people sell. Step 7, performance losses. Put all these steps together and this is what you end up with. Dalbar is an independent research firm that does massive studies on investment behavior, the real results that investors get. In 2009, they concluded a 20-year study of tens of thousands of brokerage accounts for investors who had over $100,000 invested. So not just small, inexperienced folks. And here's what they found. During this time period, the S&P 500 index returned how much? 8.2%. What was the average equity fund investors return during the same period? 3.17. How about the market timers? Actually a negative number. And if that's not bad enough, here's where the rubber meets the road. To find out what the real return in terms of purchasing power, what do we have to do with the inflation number? Subtract it, right? So net after inflation, how'd we do? It's understandable investors are frustrated based on investor's dilemma. The good news is you don't have to do any of this to be a successful investor. Here's 3 simple strategies for creating investment success. Discipline brings objectivity to financial decision making and is one of the most important elements of successful investing. Education is key. Learn how to make market your advocate, not your adversary. Hire a coach. How would it feel to overcome your fears about your financial future and experience clarity in your choices? Your success is our success. When you do well, we do well. We're in this journey together. If this message speaks to you, take the next step. Click below for a complimentary coaching session. I'm Buck Buchholz, and again, thanks for your time, and I look forward to meeting you one-on-one.